Hello and welcome to this comprehensive guide on how to choose the right ETFs for your investment portfolio. ETFs or exchange-traded funds are a popular and cost-effective way to invest in a diversified portfolio of stocks, bonds, or other assets. In this video, I will share with you some detailed tips on how to choose the right ETFs based on your investment goals, risk tolerance, and other factors. Section 1. Understand your investment goals. The first step in choosing the right ETFs is to understand your investment goals. Ask yourself, what are you investing for? Is it for short-term gains, long-term growth, income, or a combination of these? Depending on your goals, you may choose ETFs that focus on specific sectors, regions, or asset classes. For example, if you are looking for long-term growth, you may choose ETFs that invest in emerging markets or technology stocks. If you are looking for income, you may choose ETFs that invest in high dividend-paying stocks or bonds. Section 2. Consider your risk tolerance. The second factor to consider is your risk tolerance. ETFs can range from conservative to aggressive, so it's important to choose ETFs that match your risk tolerance. If you are risk-averse, you may choose ETFs that invest in bonds or dividend-paying stocks. If you are willing to take more risk, you may choose ETFs that invest in growth stocks or commodities. It's important to remember that higher risk often comes with higher potential rewards, but also higher potential losses. Section 3. Look for low costs. The third factor to consider is the cost of the ETF. ETFs can have different expense ratios, which can affect your returns. Look for ETFs with low expense ratios to minimize costs. Also, consider the trading costs, such as commissions or bid-ask spreads, when buying or selling ETFs. These costs can add up over time, so it's important to choose ETFs that are cost-effective. One way to do this is to choose ETFs that passively track an index, as they tend to have lower expenses than actively managed ETFs. Section 4. Check the ETF's holdings. The fourth factor to consider is the ETF's holdings. Look at the ETF's prospectus or website to see what assets it holds. Make sure the ETF's holdings match your investment goals and risk tolerance. Also, check the ETF's diversification and concentration. You want to avoid ETFs that are too concentrated in a few holdings or sectors. Diversification is key to reducing risk in your portfolio. You may also want to consider ETFs that have exposure to different asset classes, such as stocks, bonds, and commodities, to further diversify your portfolio. Section 5. Assess the ETF's performance. The fifth factor to consider is the ETF's performance. Look at the ETF's historical returns and compare them to its benchmark index or peer group. Keep in mind that past performance is not a guarantee of future results, but it can give you an idea of how the ETF has performed in different market conditions. Also, consider the ETF's volatility. High volatility can lead to large price swings, which may not be suitable for all investors. You may also want to consider using tools like Morningstar or ETFDB to compare the performance of different ETFs. Section 6. Understand the ETF structure. Another important factor to consider is the ETF structure. ETFs can be structured as either physical or synthetic. Physical ETFs hold the underlying assets, while synthetic ETFs use derivatives to replicate the performance of the underlying assets. Physical ETFs may be more transparent, but synthetic ETFs may offer more flexibility. It's important to understand the ETF structure and how it affects your investment. You may also want to consider the tax implications of the ETF structure, as different structures may have different tax treatments. Section 7. Choose the right brokerage. The seventh factor to consider is choosing the right brokerage. Not all brokerages offer the same selection of ETFs or have the same commission and trading fees. Look for a brokerage that offers a wide variety of ETFs and has low fees. Also, consider the brokerage's reputation and customer service. You may also want to consider using robo-advisors, which are automated investment platforms that can help you choose and manage your ETF portfolio. Section 8. Monitor and rebalance your portfolio. Once you have chosen your ETFs, it's important to regularly monitor and rebalance your portfolio. This involves checking the performance of your ETFs, adjusting your asset allocation if needed, and buying or selling ETFs to maintain your desired portfolio mix. You may want to consider using tools like Personal Capital or Mint to help you monitor and manage your portfolio. Section 9. Consider ESG investing. If you're interested in investing in companies with strong environmental, social, and governance (ESG) practices, you may want to consider ESG ETFs. These ETFs invest in companies that meet certain ESG criteria while still offering diversification and potential returns. You can use tools like the MSCI ESG Fund Metrics to compare the ESG ratings of different ETFs. Section 10. Be mindful of behavioral biases. Investing can be emotional, and it's important to be mindful of behavioral biases that can affect your investment decisions. Some common biases include confirmation bias, where you only seek out information that confirms your existing beliefs, and loss aversion, where you fear losses more than you value gains. By being aware of these biases, you can make more rational and objective investment decisions. Section 11. Consider tax implications. Another important factor to consider is the tax implications of your ETF investments. ETFs can have different tax treatments, depending on their structure and the assets they hold. For example, ETFs that hold stocks may generate capital gains distributions, which can have tax implications for investors. You may want to consider tax-efficient ETFs, such as those that track an index with low turnover or those that invest in municipal bonds, which are tax-exempt at the federal level. Section 12. Evaluate the ETF's liquidity. The final factor to consider is the ETF's liquidity. Liquidity refers to the ease with which you can buy or sell an ETF without affecting its price. Look for ETFs that have high trading volumes and tight bid-ask spreads to ensure that you can buy or sell them at a fair price. Also, consider the underlying assets of the ETF and whether they are liquid. ETFs that invest in illiquid assets, such as small-cap stocks or emerging market debt, may have lower liquidity and higher trading costs. Conclusion. In conclusion, choosing the right ETFs for your investment portfolio requires a comprehensive understanding of your investment goals, risk tolerance, costs, holdings, performance, structure, brokerage, portfolio management, ESG considerations, behavioral biases, tax implications, and liquidity. By following these tips, you can build a diversified and cost-effective ETF portfolio that meets your investment objectives. Remember to regularly review and rebalance your portfolio to ensure it remains aligned with your investment goals and risk tolerance. Thank you for watching this video and happy investing.